Good morning, team. Today is December 12th. Looking at the overall economical calendar, we can see that today's December 12th. We got some information coming out today around 11 a.m. Eastern. You have NY Fed 1 year inflation expectations. This should definitely move the market, especially with the 5 year inflation expectations. And then we have the Fed budget at 2 o'clock. That's just today. Tomorrow we have small business index, CPI. A lot of CPI information coming out tomorrow. On Wednesday, we have import price index, federal fund rates. Powell is speaking at 2:30, so that's definitely important to remember that Powell speaks at 2:30 on Wednesday. That's definitely going to move the market. You guys know the volatility that Powell brings to the market already. Looking at Thursday we have jobless claim numbers and retail sales. A lot of information coming out on Thursday as well. And then on Friday we have PMI. So we have a very busy week. A lot of this news is going to be able to move the market up or down. So this is a week to basically pay attention to see what's overall going to happen. Make sure you guys check out Market Watch, check out economical calendars to see what's going on for this week, which may affect the chart. So keeping the watch list short today because we don't know what's possibly going to happen, what's going to break out. But looking at Amazon over here, Amazon is stuck between two price points on the 20-day 1 hour. You can see Amazon stuck between 976 and it's stuck between that 870, $87.82. And then you can see it's floating in the middle. Right now, the MACD is basically neutral. Could cross up or cross down. So let's see what overall happens. It is on the bearish side of the MACD. When I say bearish, I mean below this basically divergence area, the green and red bars. So as long as it's down here, still a little bit more on the bearish side, you never really know. But that's why we're looking at two possible levels. You always want to go look at a chart with a clear mindset. So watching Amazon for a breakup 89, 70, and then we could start basically pushing up to 90 and higher, especially if the 20-day crosses up, or to the downside, you want to watch for 88, 90, and then we could start basically testing these previous lows around like 87.40 over here. So that'll be a nice levels to watch out. It's in the middle, so it's giving us opportunity for both. Jumping over towards the 180-day, you can see a little bit clearer. Now we've been trending sideways, so we need some type of breakout on Amazon to actually really wake up this stock. Basically had a pullback around the 30th of last month, and we've been basically finding some type of support over here. So we could have another leg down, right? Or we could basically find support over here and start to bounce. What do you guys think? Comment below, leave a like on the video. Jumping over to the next stock, we're going to talk about Tesla. Can't have a watch list without Tesla. Now, I love Tesla, but Tesla's looking a little bit, basically too much traffic going on with Tesla if you're looking at Tesla's charts, right? So let me just make sure everything is updated over here. Now I'm looking at the 1 year. I'm basically removing previous support and resistance on basically the EMAs and stuff like that. I have all my EMAs color coded. This dark orange line represents the 1 year EMA, right? So the reason I do that, the break of the 1 year EMA is a major trend change, whether it's bullish or bearish territory. Above it will be bullish, below it is bearish, right? So we got a MACD crossover on the 1 year. So overall, Tesla, quote unquote, is supposed to be bullish. Is it showing bullish activities? Not yet. And that's why we always want these MACD lines to further separate from each other. And that's when the move starts, right? So looking at, now we looked at the MACD, we're looking at the RSI. RSI is a little bit more on the oversold side. So it has the possibility to push back up to being overbought. So this is good buying possibly territory for Tesla, right? If we're just looking at the 1 year. Jumping over towards the 180-day. 180-day, you can see kind of like a double bottom over here where it hit 167 and then it hit 160. That's a positive sign for a possible uptrend. So watch Tesla for a move above 182, and then we could start basically pushing up towards basically that 194 level, which is also the 180-day SMA. So that would always act as a resistance. SMAs act as resistance when below and support when above. So watch out for that move. Tesla does look pretty good for a possible bounce if you're looking at the charts the way we just looked at it. Overall, anything could happen. right? This dark orange line is representing my 1-year EMA, which could be a major resistance as well. So if we do start to basically pull back from here and we can break that EMA line over here, I think we could possibly look for a short position on the break of the 180-day EMA from 177 down towards like the 167 range, 169. So let's see what happens. Follow that with a stop. Overall, 180-day is cross bullish, right? And then 20 days actually cross down, which is the only part that I don't like about Tesla. 20-day and 180-day are not facing the same direction, which could equal choppy situation. So even though big picture, it looks bullish, small term picture, we're basically finding some type of resistance or we're in a chop zone. So let's see what happens. Watch for that 177 to 175. Maybe we even get down towards those 169s. We do have the basically the 20-day SMA over here as well too at 184. So very difficult zone. So I would probably more so scalp Tesla than any long-term conviction, at least right now, until both 20-day and 180-day is crossed in the same way. Last but not least, the piece of resistance. We're looking at SPY, right? Looking at SPY. Let's jump over towards the 1 year. It's a new week, right? Want to look at that 1 year, make sure everything's correct. We have the 1 year EMA where it's supposed to be. We got the 20-day, all right? So both are represented. Let's jump down toward the 180-day. Now, SPY is in an interesting position, right? We had basically a sell-off going on Thursday and Friday, right? We had a sell-off. We basically went from like 397, and we kept on bouncing off the 180-day SMA. Now, that could be a possible sign for a bullish trend, especially since we bounced on it before last month on the 7th. And then you can see on the 11th, and we kind of been floating around the SMA over here, which SMAs can act as support, right? So we initially basically came down, bounced off of it, came back down, bounced off of it. So this could be a double bottom pattern. So we could possibly look for a long position on the break of 395 to 397. MACD is basically crossed up right now. It hasn't crossed down, so could still possibly have a bullish position on SPY. If it does start to come down, watch for the break of the 20-day around 390, 390, and then we can start coming back down towards 392. But for a real short position, you need to see the break of that 180-day SMA, right, which has been acting as support. Once that breaks, definitely want to get into a nice short position because this level has been holding up for quite some time. We haven't really broken it in over a month now. So if we break it today or this week, make sure you guys capture that. I think we're not even going to stop at 390. I think we could probably even gap down towards maybe even 384. Looking at the SPY 1 year, the MACD is crossed down. So if this starts to open, we could see some possible downside. Like if you're looking big picture on SPY, yeah, it looks like it could bounce today, but big picture, we've been rejecting this SMA for quite a while, and this could be just the bounce before the big fall. So don't want to sound all doom and gloom, but what do you guys think? Comment below. You guys think I'm right? Do you guys think I'm wrong? What stocks are you guys watching? Leave a like, subscribe, and I'll see you guys in the next one. Peace.